Hi guys, this is Vad, and I just wanted to do a very quick, short, and sweet review of yesterday's morning price action uh, and show you how everything that I was talking about on first presented fair value gaps it just materialized yet again. Um, so we are here at 9:30. We have an initial drop into the opening range gap, fully filled that, then went down. You, if you draw the fib between the first presented fair value gap, which is here at 931, if you draw the fib all the way to yesterday's first presented fair value gap of June 10th, Tuesday, just look where it stopped. Look, isn't that perfection? It's absolute perfection. Right at the midpoint. By the way, confirmed recently by Michael himself that in the range between any two PD arrays, you have around the 50% or the mid quadrants, you have an event horizon. Okay, you can expect reversals to happen at these specific points, confirmed by the man himself. So you can see that everything I'm showing you here, it holds. It happens every single week. It happens all the time if you just pay attention. Okay. Anyway, the setup here, you have an inversion fair value gap you can use here, or as soon as this green candle displaces up here, displacing from this low, look at that. Look where is the low, displaces from the low. Okay, we have a CB closed by a BC, so that's a balanced price range now. And as soon as this candle displaces from the low, now this BC, when it forms, is a perfect opportunity for entry. Okay, this will be your entry. The setup aligns, the time aligns. You can see 9:55. We trade into this BC. You have another chance here at 9:57. You have at 9:59. One more tap at 10:08. So macro time, guys. A little bit of time distortion here, and then price starts crawling up. I marked also this BC because it was on the way out of the opening range gap, and these are usually traded back to before price expands further. Um, and you have relative equal highs right here. You have this high here, minor buy side, but you have these two that are exactly the same level, relative equal highs. Okay, and then you have the major buy side, which was not traded to, and this high is actually higher than this one. Okay, this is the CPI 830 candle, and the buy side liquidity here was already purged by this high. So as soon as you see this sort of slow price action here crawling up, you can expect that this buy side is not going to be taken in the morning or this day at all. Okay, the buy side already purged here. Okay, slow protraction up. See, it doesn't really leave any inefficiency. There is no urgency to go up and take the buy side here. Okay, but these two highs, they are a proper target. Okay, so if you manage to position yourself in this BC, where I'm telling you, to here, your stop should be below the venom. I would put it like this. So you can squeeze a 3.5R out of this trade. Okay. All right. We with the stop loss, I'm covering this BC and I'm covering the next BC. So the second as well. Okay. We have to allow for price to wick to the second one. Okay. We have three consecutive ones. we have to allow price to wick that one. Okay. Anyway, slow price action. If you draw the fib also on this leg down all the way to here, you see, going above the upper quadrant, here above the 75%, and then into this breaker, and then we start going down. The move down starts at 11. Okay, so you see how slow price action was from 10 to 11. Really slow. That's accumulation, guys. It is a good setup long, but it's an accumulation. As soon as you see this really slow protraction, that's usually followed by one big slash like this, where anybody who was positioned long will be taken out of the game. Okay. All right, I'll remove this. And then lunch started, and lunch is typically also going against the morning trend. Okay, the morning trend was long, so lunch at 11:30 around here, it was the second expansion down. What is ICT always teaching us? Look for the liquidity that formed after 10 o'clock. Okay, so this is 10 o'clock. This is the first low that formed after 10. This is what you'll be looking for to target at lunch. Okay, this sell side. I mark it like this. So this sell side is your target for the lunch macro. Okay, from this CB here, if you're trading the 11:30. So from this CB here, all the way down to the sell side. Okay, easy entry. All right. You also have here, right at the top of the opening range gap, you have another CB. That's the first CB after 11:30. I've mentioned this several times. Look at that. We tap into it and then down to the sell side. Okay. Ultimately, we went further down. You can see how we are respecting the quadrants here between these two first presented fair value gaps, something I also spoke about. Okay, here price goes down into the second quadrant, then goes back up to the first quadrant in this CB, and then down to equilibrium. At equilibrium, it rejects and goes all the way back up above the first presented fair value gap. It's working out that level here before it finally drops at 2 o'clock massively to the first presented fair value gap of yesterday, and ultimately first presented fair value gap of Friday, June 6th. Okay, so last Friday. And then there was a small little consolidation and a little bit of retracement up before we close for the day. Okay. Anyway, but the thing I wanted to show you in the morning, look at how the concepts that I presented to you are working yet again this week. Okay. Yet again. Look at that. That's perfection. This taps to the thick right at the 50%. Okay. And if you wasn't paying attention to these things before, I'm sure you'll start paying attention to them now. All right. Anyway, guys, I hope you like it. Very quick, sweet, and short, to the point video. If you're new around here, hit the subscribe button, smash the like on this video, and I will see you in the next one. Bye, guys.